Happy Saturday, everyone, and welcome back to the magical Krown's ground beef cave.
Well, welcome back to Krown's Crypto Cave. Yes, indeed, just had a pound of ground beef, so feeling good. Got a good night's sleep as well, and had a little bit of fun last night. But good to be back in the game right now, as Bitcoin has done pretty much nothing since we last spoke. Played out a little bit of a bounce that we spoke about yesterday, but I still think that things are more or less kind of on the edge right now. Anyways, with that said, I want to waste no more time. I want to get in the live scene, but before that, I would like to wish you the best, also the happiest of the happiest on this beautiful Saturday morning from a very sunny and a little bit cloudy, but sunny mostly, Chicago, Illinois. Let's get into the live scene right now, and I'll push that good old teleportation button, baby, and I'll see you in the live scene. And there she is, Bitcoin on the daily. And daily hasn't really told us too much. We got of course, we got our first couple of opens and closes below that cyan 89 exponential moving average, that last major kind of pivot that I saw, from this area right here, the $10,000 saga. But realistically, now with Bitcoin kind of basing at this level, we are very much creating a massive descending triangle. I think this is best seen on CMEs right here. This lower blue box territory actually getting our lows, and we do see that the cyan 89 exponential moving average actually governing that so far right now. So we do see confluences between both CMEs and spot charts, and I'm actually really going to be focused on CMEs right here, just because I think that CMEs hold the most weight, and I want to show this from a more, standard just view, I suppose. And basically, in this 9400-ish region right here, no matter which way you kind of cut it now, whether you're bullish or bearish, that area does break. I would expect some massive floods and swaths of price action to the downside. We do see that this is a massive descending triangle, which would imply a measure move actually all the way down to the 200 simple moving average right here, which would put us down around our middle of May lows, which would actually be in the middle of the 6,000 region. Now, just because there's a measure move down there, and if we were to break this, and just because there is a measure move down there, doesn't mean that we're always going to meet that and always going to fulfill that measure move. I do think that it would be appropriate to take things one step at a time, as I've been saying, as I do believe that we'd have some pretty hefty bounces a few times along the way. I think first and most importantly would be this guy right here at about the 9,000 region, also confluent with the yellow 21 exponential moving average on the weekly, which I'm saying it's a yellow 21. It's like I'm not even showing it right now. We'll get to that in a bit, but it is confluent with that area. Just a major area of interest for Bitcoin as far as its market cycles go. If that area does break, then I'd be looking for the next major down towards this gap at around 8,500. Gap boy is going to perhaps even get their vindication. I mean, at the end of the day, do gaps get filled? Yes. But can they take time? Yes. And this is what I've been trying to say for the last 3 months. Gaps, in my experience, have pretty much always been filled. It's just a matter of time, though. So if you're just blindly shorting into something like that, well, good fucking luck with that, man. That's where the meme comes from. But actual trading gaps is certainly very much legitimate, as I think that there's been a little bit of indiscrepancies kind of talking about that. Anyways, if that area does fail, then the next sort of stop I'd be looking for is all the way down here towards the 7,500-ish region right here. And then if that area fails, then I'd be looking for a full move down to fulfill the measure move. At that point, it's like Bitcoin's so fucking wrecked. Well, we got plenty new things to discuss on the higher time frames. But speaking of the higher time frames, we do have the monthly ending tonight, and the monthly is going to be ending likely as another inside dildo, if you want to call it that. As long as we don't both take out the low side of the prior wick, which would be 90.49, or take out the high side, which seems kind of a little bit out of reach right now at $13,200. This is still just going to be considered from a monthly perspective a consolidation right now. And as it stands, Bitcoin just pretty much not really giving us too much on the monthly. In fact, it's really going to come down to next month, assuming that we actually end it somewhere like this, or just by basically not breaking the prior structure. Looking at monthly oscillators, we do see still monthly Stokes actually really gaining momentum to the upside there. I would expect that to slow down a little bit on this next tick, but more importantly, we are officially out of the bearish control zone for the first time in over a year. This is where Bitcoin did kind of accurately gain its bullish momentum from 2015 into basically the next bull cycle right on over here from December 2015. You can see the same region right around the 40 marker, leading up from about $400 all the way to $20,000 price per Bitcoin. Not only that, but we do see monthly RSI right here having a very similar signature to what we saw in that same area as well. Actually, this one coming from June 2016. So Bitcoin played out a bear market from 2014 to 2015 essentially, and 2013 to beginning of 2015, if you want to call it that. We get our first test into the bullish control zone right here in June of 2016, and it gets quickly rejected. Comes down for about a let's see, what would this be? About a 44% retracement right there, and then catches wind of the exponential on this, and then gets gets driven up and we see the next like 4 years, or sorry, not 4 years, but 2.5 years of just straight up price action. Well, the current present times of Bitcoin look extremely similar. Bitcoin plays out about a year-long downtrend right here, pops up, and then we get the exact same signature on the monthly RSI, getting rejected by the bullish control zone on the first pass. That's completely fine. Pretty damn normal stock standard stuff. And I would be looking for any sort of a test back around the exponential on this to be kind of bought up. And you do see that it's coming in right around the neutral zone as well. A little bit more close to the bullish control zone, to be fair. But you do see a lot of price action kind of being gathered around it. So it is a pivot. And I would say that as long as Bitcoin, if Bitcoin does come down around here and you see it start to V out, that's going to be a damn good signal from longer term. So macro is macro is still okay. It's the micro and the medium time frames which do cause concern for Bitcoin. This is all essentially encompassing the fact that Bitcoin does not break the prior monthly low at 90.49.5 on stamp. If that were to happen, then we're probably going to take on a new meaning, and that's when I really start to look for all of those measure moves that we spoke about at the beginning of this video to get hit. So that's really what's at stake right now. So the more that Bitcoin just goes sideways without really breaking this area, kind of the better. Although the problem is that because we are in a descending triangle, no matter which way you cut it, it is a bearish formation. Doesn't mean it's always going to break out to the downside. I've seen descending triangles break out to the upside before, but statistically speaking, it's pretty low. And more importantly, with that, even if that would also suggest that even if Bitcoin bounce here, the ball is still in the bulls' court to prove themselves. We need to get back above really like 10.5 to 11,000 for bulls to be kind of looking a little bit more healthy. For right now, Bitcoin a lot more close to that major support than it is to the resistance, so that creates a bit of an issue. Anyways, talking about this a little bit more here, we do see monthly jewel likely to get some more divergence, I'd imagine, but going to be hitting a little bit of a resistance zone in this region as well. So not really a signal in and of itself, but just something to keep in mind. I do want to talk a little bit more about the monthly RSI though. Remember, so we popped down over here after getting rejected by the bullish control zone for about a 44.5% retracement. Well, let's just kind of play around with the numbers here and see what a 44% retracement would look like thus far. Keep in mind, we've already played out about a 37% retracement from the high of almost 14,000 down to the 90.50 base. But if we would extend that to what we saw in 2015, 2016, another few percent, funnily enough, actually, or perhaps not funnily enough, actually brings us all the way to 7,900 realistically. So this is very, that would also be concerning. I mean, Bitcoin, if Bitcoin came all the way down there, that would start to destroy structure. So while I would be looking for a bounce off that region, well, it starts to create some other problems. So anyways, moving forwards here, as again, these are things that have not happened yet, but if they happen, that's kind of how I'd be thinking. Going back on over here, just making sure that I'm recording. Okay, good. Looks like all my cameras are on. Okay, working. Okay, great. Ha, good. Anyways, let's put on the accumulation distribution indicator, and I do want to talk about this for a second. This is the net delta indicator for Bitcoin, and we do see that we still have a positive slope on this baby. Now, we will be getting a new tick on this later tonight at 8 p.m. Eastern Time. If this remains a positive slope, I don't care if it loses its slope to the upside, but as long as it remains in a positive slope, that would be a good signal for the bulls longer term. Longer term, remember, we're looking at a monthly here. In the short term, you're going to have all sorts of volatilities going, every which way. We'll get into that in a bit, but I want to talk about the higher time frames first, because today's it's the monthly day essentially. And if we do see that this retains its positive slope, then yes, I would be looking for this ultimately to kind of ultimately to resolve itself out in favor of the bulls. But as you can see right now, it really has flattened itself ever since it kind of turned around from actually calling the lows in January of this current year. By the same token, once we got a negative slope right on over here in March of 2018, it didn't necessarily call the high, but it did get all of the rest of this nastiness all the way down to that 3100-ish low that we have thus far. Anyways, so that's something to keep an eye on going forwards, as we will be closing that later tonight, as I said. And of course, putting on the Trollinger bands here as well. I think that it is interesting to me to see that the top Trollinger band, a lot of people are going to tell you that this is a rejection. I would not consider this a rejection until we actually do trade below the low of the prior monthly dildo. Now, the problem with the Trollinger bands, or maybe not the problem, I mean, if you're short, this is not a problem at all. But if you're looking at this, and if we actually do take out the low of this guy, then typically, that's, if this gets considered a rejection, then very, very likely that we actually do come down and test around the 27 moon average, the medium band of this, or not really a band, but it's just a 27 moving average right here. It's represented by the silver-ish moving average, and that's currently at around 7,000. It will be kind of moving around, of course. But that would start to line up with our bottom targets, if we were to take out the low of last month's dildo. So things are pretty frothy here, just because if we do essentially initiate that, that's where the issues happen, right? Anyways, going back into Bitcoin, now let's talk about the lower time frames and get off these disgusting trolley bands, get them out of my face, and get on these beautiful, 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 beautiful exponential moving averages. And as you can see right here, putting on the drawing tools, we do see that the bottom blue box still holding up price action okay. We are starting to see higher time frame oscillators start to move around in more bullish posturing. However, they are not there quite yet. Here's your 12-hour Stokes right here. Yes, they do look a little bit weak to the downside. Looks like they kind of do want to cross back up to the upside, but it's not until they actually do officially do that. And of course, this is very interesting to me because we do see historical volatility percentile on the 12-hour get extremely low here, right? And if it's getting extremely low, then that means that we're preparing for a pretty damn big move. And we see this actually accompanied by most, a lot of time frames that matter, most importantly. And when we're looking at something like this and kind of pairing it up with our momentum oscillators, if we were to get that next signal to the upside, that would be a damn good sign for the bulls to likely see that volatility expand it to the upside, right? Force it back up. But keep in mind here, the 12-hour is in a very precarious place. We are stuck below that purple 200 exponential moving average right now, and thus far we're just using this whatever you want to call this liquid zone down here as support. It is kind of coming off the 2-day 55 exponential moving average, but for right now, Bitcoin kind of stuck between these two places right here. Doesn't really offer up too much opportunity on the lower time frames. In fact, the lower time frames are pretty bifurcated from the higher time frames. We do see, I think, 3-hour Stokes probably getting a little bit toppy right now. Let's check them out. Let's see. Actually, we are trying to cross down right now, but it doesn't look too strong. 2 hours certainly going to be down, I'd imagine. Yes, indeed they are. Hourly is going to be down as well, I'd imagine. Oh, nope, it's actually crossing up. Okay, very interesting. Because when I see something like that, it would kind of align with typically popping back down and testing the liquid zone. That gives enough time for those oscillators to reset, and then we get on the same side as something like a 12-hour or a daily, of which, remember, the 12-hour right here, and this is what I really like to focus on here, is looking like it's almost there in that posturing, but not quite there just yet. Of course, do not front run those signals because, well, I mean, it's there's been a lot of times where it looks like it's going to do it, but until it actually fully confirms, you never know what that next leg can take you. So I would strongly suggest not learning the painful, not having to learn the painful lesson of front running your own indicators. Then, of course, pairing that up with historical volatility percentile, as we said, on the same time frame, suggesting that this next move is going to be, quote unquote, the move. I mean, if this expands to the downside, then, well, like I said, there's probably going to be bounces to the downside, but or I'm sure that they're extremely likely will be bounces to the downside, but it's not going to look good at all, man. It's not going to look good at all. Of course, daily's kind of in the same posture as well. Remember, daily historical volatility percentile still downtrending. We had a little test up to the volume moving average, the volatility moving average right here, and then still trending down. So that tells us that we are actually still consolidating on the greater whole. In fact, this was not a symmetrical, or looking at this as a symmetrical triangle breakdown was not the right way to be looking at it. From the past week, we just really need to give it more time in order for us to see that it's actually a descending triangle. The volume signature on this also does agree, of course, as we do see a nice falling off from left to right, and this would suggest that we probably do find resolution around the same time as it's kind of looking for on the symmetrical triangle anyways, middle of September, essentially early, September, 9th to 20th, probably somewhere right around there. I would be looking for resolution on this triangle on the whole. And if we're down around the bottom during that time, well, you're going to look nastier and nastier, man. Momentum oscillators for the daily are still headed down right here. Daily Stokes down, daily RSI getting comfortable in the bearish control zone. Really don't like that. I mean, do we have some bullish divergence going on right now? On a daily, it's not really bullish divergence. People will tell you that this is bullish divergence. It is not, and this is coming from someone who wants to be bullish. I mean, I want to be bullish for a very selfish reason, just because it makes my life fucking easier. I mean, you don't need to be too smart to make money in a bull market. But this would certainly not be bullish divergence right here. Anyways, to me, the lower time frames are pretty much capped by this order block right here and this liquid zone right here. So the liquid zone essentially is at 9400-ish level. The order block would put us right around 9750 to 9850. Do need to see bulls regain that sooner rather than later. If bulls can regain this 9750 to 9850-ish level right here, I would be looking for a run all the way up to about 102-ish region. Likely retest this area right here. Things get interesting to me from the bulls perspective if Bitcoin can get back above this 10.5 order block right here. If that can be regained, then yes, bulls start to look a lot better, in the more medium and longer term. Macro still kind of unchanged. The monthly hasn't really, had a chance to do anything different, so we can't really say anything new about that. But for right now, you can see that Bitcoin obviously stuck well below all these guys right now, and we do see pretty much all time frames are like getting very, very low on historical volatility percentile. This is your 4 hour right here. 4 hour is pretty much flatline. I mean, look at this. It's been downtrending the whole way through. This one is ripe. I mean, we have just a little bit more to go, and still kind of suggesting the same area, somewhere in this like September 10th to September 14th region right here. And I think this is even mirrored by the 6 hour. The 6 hour historical volatility percentile getting pretty low as well. I mean, Jesus Christ, man, that is fucking a piss powder right there. Same 8 hour, same thing. 10 hour gonna be the same thing. Obviously, it's only gonna be the lower time frames are gonna be bifurcated from that, but that's okay. As well, that's how they're designed, of course. Anyways, so yeah, as far as what I'm thinking on the lower time frames, I don't feel too confident on the lower time frames. If I had to call something here, it looks to me like maybe we probably pop back down around here to 94.50, give another test in this liquid zone, and then try some up and give a legitimate test of this. But the bounce that I was looking for yesterday, I mean, that was mostly, I mean, I'm sure the question right now is, was this the bounce that we saw, from about 90, what is this, 93.50 all the way to 97, about $250 bounce. Yeah, if that's gonna be the bounce, and that's so fucking weak. I mean, that would be extremely bearish. But I think it's a little bit too early to call it right now. Actually, in fact, historical volatility percentile on the hourly has been lying dormant for like half a day now. This thing's set to explode, and I do think that we get some movement, in the next few days actually. So yeah, let's see. That would also suggest, though, with momentum oscillators turning back up here, perhaps we do actually test the upside first. So again, I don't feel too confident on that. I wouldn't take any trades right here. If we come back down around here, I don't hate taking a trade. Just a very easy way to manage risk if it goes against you. And if we pop back up into this, in this order block right here, that's where things get a little bit more interesting. But need to see Bitcoin both open and close, not even open and close, but just regain it on like a 4 hour dildo above 98.50. That would look okay and probably set us up for a move into the lower 10,000s. So yeah, that's essentially what I'm looking at right now. For full disclosure, I have no real positions on. I've no real positions on right now. I do have some short call options on my derivative account right here. You can see that I'm basically break even, but what I'm looking at for here is I sold these guys for, I don't know, like $450 on the 9,500 strike, right? So that basically that to me is like the same as selling at 9,900 or 9,950, I suppose. And more importantly, the reason why I'm doing that isn't because I think that Bitcoin's just going to fall on its flat on its face here. No, it's because it gives me options with moving through this, right? So if Bitcoin comes back down here and I want it, and I want to gather some long stock, or sorry, some long coins, whatever the fuck you call it, whatever the fuck you call it in this game, then I already have that paired up with those short calls. However, then they'd be out of the money, so they're not really covered. But I'd basically be banking on a bounce above this region right here. So if we did actually shoot through this region, if we break this region, then I can short the 9,000 strike calls. That would cover my long, I keep on calling it long stock, long coins, and then I'd have the decay of the 9,500 strike. And because this is a massive pivot to the downside, I'm more than happy to kind of arrange my trading activities below that. I mean, shit, I could just take off the long stock anyways. We don't really have to risk all that much to figure out if that one's going to go in your favor or not. More importantly, though, why I like this play is that when I short these guys right here and they have a premium of like $450, which again is like as long as we close in the money, it's like selling at 99.50 region. Then I would say that it gives me a very easy way to kind of manage any sort of long trades if we were to shoot straight from here up. And essentially, I could buy, I could buy some spot underline here, lock in about $250 worth of gain, and then on Friday they expire, and then I have that long position. And because we're back, and presuming that because we're back above this region right here, we're likely to continue. So then I have my naked long underline. So you're making money on that. So you're making money both ways. First, you lock in $200 per contract, then then you're just benefiting from the upside after expiration, and you can do the same thing after that as well, if you desire, which I certainly would be doing, just because we're in such a like choppy area here. I fucking hate that word choppy. I think it's overused. But we're just in a very dense area. I think is a more proper term. This area is just fucking laden with resistance every which way that you go. So I would rather be a little bit more direct and a little bit more proactive with managing my risk and being very conservative with taking those in. You know, I'm happy to take in $200 per contract right now if I know that if I know that I can just lock it in right now and not have to worry about it. That's completely fine for me, and that's what I love about options, because they allow you to really benefit from this sideways bullshit action, which I think can really throw a lot of positional traders for. I mean, it's just like, how do you trade this positionally speaking? If of course, if you buy the low and sell the high, it makes it that easy, right? But it's also not that easy. More importantly, like for trend traders, what do you do during a time like this? Well, nothing. I mean, there's no real trend to trade. If you're talking about the high, I mean, this isn't even a higher time frame. This is a fucking daily right here. It's been pretty much trendless. Looking at the 2-day, you do see that the 2-day is actually catching wind of the green 55 exponential moving average right here. The problem is that we did have a pretty nasty moving average cross right here. This one's spoken about in the Technical Analysis 101 playlist on YouTube, 100% free. So definitely go check it out, as these two guys crossing to the downside of each other is usually not the best sign. Although we don't really see too good of a history of it playing out on the 2-day dildo time frame on Bitcoin, to be fair. I don't think that maybe Bitcoin doesn't have enough price action history for something like that. But we do see 2-day Stokes still down. They're getting quite low there, of course. We do see 2-day RSI getting into the bearish control zone. In fact, the 2-day RSI though, can we say that we have a little bit of bullish divergence here? Nah, still don't. I mean, still don't. People would tell you that this is bullish divergence. That is, it's incorrect, is what it is. It's technically not. Although this signature actually typically does pop back up, to be fair. But I don't want to go off too much hopium right now. Let's see, 3-day looking pretty much the same as the 2-day actually. 3-day Stokes still down. 3-day RSI getting into the bearish, or looking like it wants to get into the bearish control zone. 3-day RSI kind of still looks, you could still kind of make an argument for that it perhaps is a falling wedge. Again, I'm really trying hard for the bullish hopium case here, but if you are looking at something like this, that still does actually work, to be fair. But it would suggest that we do need to break back above the neutral zone in order for this to operate and such. If that were to happen, then I'd be targeting move actually all the way up here towards 10.5, but we don't have that right now. Again, also 3-day Jewel. This was the big one coming in from a couple weeks ago. We got the sell signal right on over here. I think this was like exactly 2 weeks ago on the 15th or 16th, and that caught the top at around 11,000. And now we're actually, now it actually is starting to look like more of a 3-day Jewel signal, right? So typically when I see a signal on the 3-day Jewel, I'm looking for like, multiple thousands of dollars worth of price action. The last big signal that we got on the 3-day Jewel for a sell signal was at the 20,000 top, actually over here. The time before that for a buy signal was actually on the 3,400 low right here. So to me, these are always, to be respected, except, I was looking at this one running over here, and if you remember me from the last week and a half, I kept on discounting it, so always to my detriment. Every time that I've disregarded the Jewel, it's always bit me in the ass and been extremely embarrassing, because it's just so fucking obvious on the Jewel. But looking at other time frames, it's like, maybe it does this, maybe it does that. Nope, Jewel just fucking gets it. So sometimes it's instant gratification, but hey, if it works, it works. Anyways, let's go check out GBC. And actually, I forgot to check out how the weekly ended on CMEs, but we can see both the weekly and the monthly close for GBC. GBC actually testing down to the yellow 20 max benchmark average on the weekly here. So perhaps we do see a little bit of a foreshadow of a move there. Daily looks like daily looks awful. It looks bad. The only way that I'd kind of be respectful of the daily is if we actually pop back above this horizontal right here at about 12.17. But we have the same formation on the daily for GBC, right? We have essentially a descending triangle, broke to the downside, got a little bit of a pop back up right on over here, but closing the day below the 89, not the best signature right there. I'd imagine that if Monday we open anywhere lower, that's going to be, we're going to see some major downs, likely into the 8,000s. What about the weekly? How did the weekly end? Like I said, ended on the 21 exponential moving average. So do I expect to see a bounce off this region? Hopefully I do. Hopefully we do. Yes, I would say we more than likely have a bounce off that region though, first and foremost. And of course, the monthly has essentially ended for GBDC. And look at this, GBDC actually did take out the prior month's low. So we're seeing something completely different on GBDC. Is GBDC leading is the real question. And if it is, then we're likely in for some actual downside here, which is pretty concerning, you know. So it's definitely time to be a little bit more conservative, a little bit more protective of your gains, especially if you've been riding this whole move to the upside for the past 6 months. Now's the time to really be protective of that. So yeah, GBC not looking good. To be fair, we do see the same sort of signature on monthly RSI for GBC. Well, we don't really have enough history to be fair, so yeah, maybe I should kind of back away from that. Let's go check out CMEs and see how they closed the month. CME monthly closure did not break the prior month low, in fact, but we really don't have any price action history here. It's only been around for a little bit over a year now. Let me just I actually really need to take a sip of this water. Just 1 second, my friends. Alrighty, there it is. Okay, and what about a weekly on CMEs? CMEs don't look as bad on a weekly, actually. Still kind of using that 21 as a little bit of a basing format. Not really getting too much unique information off this. Right now, GBC is the one that looks significantly different. Yeah, this is your monthly. We're not getting anything from that right now, unfortunately, but still kind of like the same levels essentially though. So it does have congruence with the spot underline, but GBC is the one that's actually doing some difference. So we're likely gonna get a damn good we're likely gonna get a damn good indication if this actually wants to follow sooner rather than later. I'd imagine on Monday or Tuesday. God, man, that is going to be nasty if that happens. Let's go check out the Crypto Fear and Greed Index. We are currently at a 20. What's that cough on my ground beef once again? Extreme Fear, which is certainly down. I mean, this is concerning to me because Bitcoin's spending so much time in the extremely fearful zone, while Bitcoin has been in a macro uptrend for the past 6-7 months. Is not what you'd expect. I mean, you'd expect this kind of V bottom out of here relatively quickly. I mean, you expected it to kind of stop right here. But no, spending more time in this region is a little bit more nasty, to be fair. But again, not a signal in and of itself. And more importantly, when we are still, if we are going to make the assumption that we are still in a macro uptrend, which as of right now we can still say that, although if GBC is anything to go off of, that could be changing very very quickly. But if we can still make that assumption safely, then we would expect this actually to be a good bottoming area coming down to a 20 marker as we approach a major support on price action, essentially the low side of the descending triangle, which is a descending triangle at the end of the day, man. It's more likely to break out to the downside, but you'd expect that your sentiment indicators would likely, force you back up. Anyways, so let's go check out the expected moves chart, and the expected moves chart also suggesting that we actually do probably, go a little bit sideways here, but probably test some upside. I do think that we test formally into the lower blue box territory between 97.50 and about 98.50. Just this guy right here is what I'm referring to, right here. Actually, Bitcoin's starting to poke up his head once again. So that's what I'd be looking at from there, and that's likely going to match up, if I had to guess, with the first standard deviation. Of course, it does, 98.50, or sorry, not 9800 even, actually, so right in the middle of that region. So, if we do pop around there, I would say that Bitcoin likely to pull back on the first pass on the lower time frames. Higher time frames, though, if we do see any sort of like even a 4-hour dildo close in that region or above that region, then I'd be looking for this to get extended actually again to the second standard deviation right here to the upside, which would actually be 10.1. In fact, I would actually suggest a little bit higher than that, maybe 10.2. Retest of this triangle right here that we broke down from last week would have some good influences there. But for right now, I really don't feel confident on these lower time frames. When I see bifurcation between the hourly and say the 4-hour, I typically want to go, well, is the 4-hour actually bifurcated from it? Let's go check it out. I don't think, whoa, it's actually still up. Hey, I was not expecting that. All right, so everything's kind of turning up right now. Very interesting. Very interesting. Yeah, that actually does throw me a little bit for a loop, because what I would expect to see is I'd expect to see the lower time frames actually headed down right now, and the higher time frames kind of bottoming out. But that's actually not what we see. In fact, with regards to price action, what would that suggest? Well, again, I'd probably just be neutral here. This is a zero trade zone for me. I take a trade right here. I take a trade right here. Those are the trades that I'm looking for. But in this region right here, if I had to call a move, what a fucking mess. I think I'd still say, down first, test this downside first, then do one of those fucking BART catapult moves to the upside. Then again, if we break this blue box to the downside, that's, good fucking luck, man. Good fucking luck. Like I said, at that point in time, it's only going to be targets lower, really. 8,900, 8,400. 7,500 and 6,600, I think. So yeah, it's getting quite intense here. Let's go check out traditional markets, see how they close the week at 292.5. So we did end the day, or sorry, we did end the week on a little bit of a down note. We opened up Friday, above all these last prior highs, probably got everyone in, and then slam it right back down. I do think that this still comes down to my target of 275-ish region over the next couple weeks, most likely, somewhere down around here towards this last prior low from our June from our June lows, also synonymous with the 89 exponential moving average right here. And yeah, we did close below the red 10 symbol. If we did take out this high coming into next week, anywhere above 294 and a quarter, then I would be looking for this to get extended to the upside towards about 297, 298, and then I'd probably be looking for the same thing. The only way that I kind of reverse my opinion on this as what's it called, as not likely to come down and fulfill that 275-ish region over time, is if we actually started to really just actually close dailies back above $300. Then this would look like reaccumulation. But for right now, not so confident on that one. Let's see how the monthly ended for this as well. Monthly did end above all major movement averages, but I really don't like it when you get these like bodiless dildos next to each other, especially on higher time frames. So we have one right here for July, and then we have one set in here for August that we just put in on Friday, and that does put a little bit of downwards pressure on price action as well. I'm curious though, we're not going to see the next tick on these oscillators, but we do see monthly Stochs getting a little bit more tired there. We see monthly RSI actually getting rejected by the exponential, and I imagine that it probably does continue down there. So that would still kind of fulfill my bias of looking for a test somewhere down around the yellow 21 exponential moving average on the monthly chart here. Anyways, let's go check out gold as well. I want to see what he's doing. 1520-ish region. So it looks like we did fade that. I do think I'm going to be right on this being the pullback right here. Yes, we did. Okay, so I do think that this likely comes back down to our next target of like 1500-ish region, somewhere around wherever the 21 is, about 1505 or 1506 region. The real question is now is was this target front ran? And I'd say yeah, I think so. We do have a massive shooting star dildo in formation right there. Do we have continuation of the downside? We do not just yet, but any sort of a tick below 1517, and I'd be looking for this once again to come down to the lower 1500s, 1500 to like 1505 region, and then probably spend some time going sideways here. We just had a pretty massive run in gold. This was a beautiful breakout, no doubt about that, but now probably going to trade sideways, similar to Bitcoin, I'd imagine. Trade sideways to down, consolidate a little bit lower, and then later on, maybe at the end of the year or next year, try some more upside. Gold, remember, moves at like a snail's pace, so it's going to be taking its time, right? But for right now, the run was had. I do think that this blue box territory right here is front run, and we do, and now we're going to go, consolidate for a little bit of time, shake some people out, and then probably start trending again, as I do think longer term this is actually quite healthy. Okay, cool. So back on Mr. Bitcoin, time to wrap this bitch up because I've been speaking for too long already, and we see hourly right here starting to curl down. Yeah, so I do think that we come back down to this like 95 or 94.50-ish base right here, somewhere in this region right here. If we do see things start to turn around from this region, then yes, I'd be looking for this to catapult back up towards the 98.50-ish region right here, and then we'll kind of reassess once again short-term resistance. If it does get taken out, with some sort of like a medium or higher time frame delta closure, then we could talk about a move back up into the lower 10,000s. So right now is right now is like the time for the bulls to really right now is not a fun time for the bulls, right? Because we're sitting on this bottom support. If you're looking at it like this, it's a descending triangle. If you bounce up from here, it's still a descending triangle, no matter how high you get, as long as you get up to about 11.6, right? So Bitcoin has a lot of work to do. Like I said, though, just because it's a descending triangle doesn't mean it's always going to break out to the downside. Just more statistically likely. We are still in a macro uptrend, so that would be a little bit contra to it, and that does diminish the probabilities of it, to be fair. But as you can see, Bitcoin has a lot of work to do here. So those are the relevant levels that I'd be looking at. And as long as Bitcoin's kind of down around this region right here, I'm not really too intent to actually to trade it. Just gonna be doing it with options, as it gives me options to kind of manage around. Depending upon how we break this next level. So with that said, I do want to leave you off there. I'll be back on tomorrow, and I'll upload another psychology video today. Today, I believe it's scheduled for. I scheduled them all like a long time ago, so I have to remember what time they're actually set up for. But I believe it's coming out today. And with that said, I want to wish you all on this nice little Saturday. As always, wish you the best of the best. Take care, and see you soon.